Hey guys, it is Mark Coe for Monday, 16th of October. Thought today I would take a look at one trade in mind, dollar yen, to the short side. And the reason this trade is of any relevance is because both the daily model I use in my analysis, and also a bias, both turned short on the 10th of October. So using levels, what I'm looking for. When I'm looking for short trade, right? And so I know I'm looking for short trade because, again, the daily model and the bias are short. I am now looking for edges, top edges. Can look for bottom edges for sells back into a bottom edge once they're broken, but ideally top edge sells, and when you're looking for long trade, bottom edge longs. So in this circumstance, it's top edge sells. So this is the top edge that's holding on the 6th of October. That's a Friday, Monday, Sunday evening into Monday. This is Tuesday evening. And you see what's being built here, short-term edge to lean against. So it's beautiful sell against an edge. Sell against an edge. And you see the rotation. This sell gets you 80 quick points all in one day. And then dollar yen spends a few days hovering between 112.20 and 112.16. So all the focus is top edge sells. And why this methodology makes so much sense is because you walk in, for the more swing or intermediate term trader, you may not get as many opportunities to act. For the short term trader, you have a real focus on what direction you're looking at. So this is a 30-minute chart. Still pretty short-term stuff, and you can see edges developing throughout any given day. So this is Monday, this is Tuesday. Well, right away, you're starting to see some edge develop in here. This is Tuesday. There's not a lot to connect it to over here. As this edge develops into Wednesday, you notice that is the bottom, and again, the breakdown out of this tight consolidation. So already a much more impressive place to look. So again, think about it. The bias of sell side two edges, 80 points, 40 points, 40 points, right? But all with the same mentality. The bias in mind. I want to be short dollar yen. I'm a seller of dollar yen. Model holders will just be short throughout the whole thing. They may or may not get a very big move in this. More active traders, and there's an argument for both sides, both approaches. One, a more active style. Anything that's rotational and will have several touches is going to look pretty good on an active approach. Anything that's very trending in nature is going to look good in a longer term movement. So, the idea that there's validity with both. But this approach is serving both the daily and the bias because they get them short the same day. So again, this is Wednesday. This is into Thursday. And so you see not a lot of top edges developing. There's some shorter term edge in here, but it's lower. It's not as impressive as this. This edge would be basically this edge right here. And so you see it was there on Tuesday. We played higher on Wednesday. Now we're coming back to Thursday. The same edge, right? So this is the one we said was not quite as impressive on Tuesday. Came back into play on Thursday. Again, on Friday, what's going on Friday is you're just starting to see lower and lower top edges develop, which is what you would want to see in a short-sided market. But in addition to top edges getting lower, you also want to see bottom edges getting taken out. So we were using basically a 1220 to 1230 area, about a 10-tick wide area. And very briefly on Tuesday, that area gave way and then served as some very impressive bottom edge for a couple days. On Friday, it was broken and served as the tap back into sell area. So both of them have a lot of function, but it's how you view them that makes it really important, and understanding what those edges are. So there were multiple opportunities for the short-term trader, which a lot of our audience right now is really focused on short-term. But you have to understand how it plays into the bigger picture and why this is so impressive and why it's so important is important because you've gotten an overall bias correct for 120, 130 ticks, and so you've been able to take more than that out of it. It's also important, the number one reason is because you define your risk. You define, hey, if the market trades higher, I'm wrong at such and such a number. And that's the most important part to understand about your bias and how you're treating it, because ultimately you have a spot where you're saying, I'm wrong if the market trades to 113.20. I'm off the idea. But until it does, I'm going to be a seller here. I'm going to be a seller here. And each one of these rotations, you're talking 80 points, 40 points, 40 points. All of a sudden that's 160 points and you're still in a 50-point range. By the time you get a break lower into Monday, right? By the time you get a break lower, you're looking at a couple hundred points. And so think about where dollar yen is trading now. Right now, back into this same breakdown area from Friday. And again, what are you wanting to see? You're wanting to see bottom edges give way and top edges hold. So at the first spot you start to see top edges break and bottom edges hold, especially as a short-term trader, you recognize the difference in momentum. So again, for Monday, October 16th, it's Mark Coe, and I hope you guys are having a great day and off to a great week. Cheers.